Welcome back, traders. It's lesson 10, and we are going to be talking about trading psychology, a super important topic in trading. So let's dive right in. All right, so psychology, what is it and how does it impact you in trading? Two key variables in the successful trader equation are the trader and their system. So if the system is proven to work, why wouldn't you have a successful trading outcome? Why do a lot of traders struggle? Well, many top traders will tell you the majority of successful trading is down to psychology. Professional and amateur traders alike know that emotions will run high when you're about to enter a trade and are in the trade and have just closed the trade. We know that feeling of euphoria when the trade immediately goes our way, fear when the trade is in red, or self-doubt when we've just lost the last 3 trades and we're wondering if we've lost our touch or have forgotten entirely how to trade. We experience hope, wanting the trade to come back that has gone too far against us, and greed when we want more to compensate for all of those bad trades beforehand, and then we desire for revenge when we feel the idea really should have worked. All of these emotions cause us to deviate from our process and our trade plans. Traders are human beings. We cannot avoid emotions. What is important is that we recognize the role those emotions play and learn how to contain them. Each trader will have their own emotional vices and feel the burden of some emotions more than others. This is our unique mental composition that is made up from our own experiences in life and plays a role in how we function in the trading world. And then there's a clear distinction between professional traders and others, and that is that they acknowledge this impact and use several methods to help them contain their emotions while sticking to their trusted process. In fact, because of this understanding, professional traders can take advantage of the price movements caused by those unable to contain their emotions. Remember, we spoke about sentimental analysis? So with all of that, and now that we understand the role psychology plays in our performance, we must acknowledge it and incorporate it into our mindset. That is, establish a trader mindset. So approaching trading with the right mindset is one of the ways to help ease the emotional impact and can make a great difference. In having the trader mindset, we must accept that firstly, our first responsibility as traders is survival. The market will be here tomorrow, it will be here next month and next year. Our job is to focus on staying solvent and implement proper risk management to ensure that we are around to implement our trade strategies each and every day. We don't want to be taken out of the market because of emotional and psychological mistakes. Next, successful trading is not about being right, it's about trading right. So you don't need to, nor will you be right all the time. Success in trading largely comes down to what you're doing when you're wrong. We have to contain those losses. We can be right 90% of the time, and if we are struggling and not containing those losses when we are wrong, that 10% of the time, that can wipe out all of that good work in no time. And a lot of traders struggle with that. And that takes us to our next point. Losing is as much a part of trading as is winning. Losses are unavoidable. There are just going to be times when you have to take the loss. And as traders, the trader mindset says this is something we experience and just have to accept it. It is just a part of the game. If we don't accept losing, we can't play the game. That's simply it. And next, we can only control what we do. The market is its own beast. It owes us nothing. It cares little about us and it does what it wants. So our job is to make a plan and stick to it. And again, we can only control what we do and let the chips fall where they may. And lastly, we are human beings. We will experience emotions. We cannot eliminate them. This is a part of our makeup, but we can contain them. Let's now explore this point a bit further. So our last section of this lesson, managing emotions. We know and expect that as humans we will have emotions when trading. As traders, our duty is to identify when we are experiencing these emotions and try to be aware of what they are making us do. When you become aware of yourself being influenced by emotion, here are a few tips to manage them. Firstly, going for a walk, stepping away from the screens to clear your head. We always talk about being tilted, that is being overcome by our emotions. We need to identify that and take ourselves away from the situation so we can calm down and then come back with a clear head. Next, hiding your profit and loss. If the fluctuation in the numbers stirs your emotions, try only viewing them at the end of the trade or after the day has calmed down. Next, switch to a higher time frame. If you find yourself triggered by each tick in the market, try switching to a higher time frame. For example, moving from a 15-minute chart to a 1-hour chart or a 4-hour chart or even the daily. This makes the ticks a lot less aggressive in front of you, and it helps us to zoom out and understand the bigger picture. Next, write your trade plan down and have it beside you. Go back to it when in doubt. Remember, the trade plan is made when there's no risk on the table and with a clear mind, no emotion. Trust the work you put in, because remember, our trade plan is the result and the product of a serious and high level of preparation. Next, talk yourself through the process. Ask yourself, am I doing the right thing? What am I feeling right now? Am I implementing my trade plan as it should be? Go over your trade plan. Say to yourself, this is what I said. When I had a clear mind, my emotion is now playing a role. I need to step back and let the trade work. Next, exercise. Get those endorphins flowing. And lastly, as we said before, you have to establish that trader mindset, and a part of it is accepting the loss before entering the trade. As we said in our example in the previous lessons, the risk or the loss is the price you're paying to experience the potential reward. So if you accept it before the trade, you have no issue getting into the trade or taking the loss itself. You can just move on to the next one. And that's it for this lesson, traders. Thank you for tuning in. Looking forward to seeing you in the next lesson, where we'll talk about psychology a bit more and take you through journaling. So take care, bye for now, and see you soon.